This podcast is made possible by HiRadius.
Hello, this is Adriana Carpenter, CFO of Brex, and you are listening to CFO Thought Leaders podcast.
This is episode 820.
And we think about what is the value we're creating for our customers. And I think that's really important because number one, that's a goal that isn't really a finance metric. It's something that the whole company can rally around. And engineers and product people or operations folks, they can all focus on increasing that value for the customer. And we want to increase that alignment with our customers. And it's also important for us to think about from a finance perspective when we think about pricing, because we're always making sure we want to be creating value for our customers, pricing at a very large discount to that value we're creating, extracting some of that value for ourselves, but ultimately delivering a lot of ROI for companies that are buying our software products.
Hi, it's Jack. On today's show, we speak with Adam Swiecicki, CFO of Brex. Prior to stepping into the CFO role at Brex last fall, Adam Swiecicki tells us he hadn't given a lot of thought to stakeholder capitalism, the buzzword du jour for business practices that strive to deliver value, not just to shareholders, but employees, customers, and stakeholders at large. However, as Swiecicki rounded the corner on his first few months as CFO, he says he experienced a big transition, a big change in his leadership mindset, one that would lead him to adopt the precepts of stakeholder capitalism. Our talk with Adam Swiecicki begins after this. Did you know more than 60% of B2B invoices are paid late? Well, then it should come as little surprise that the priorities of finance leaders have shifted towards accelerating cash recovery and scaling business growth. To address this issue, HiRadius now connects your credit, billing and invoicing, cash application deductions, and collections into a single business process and empowers your finance team to champion your business's high-performance culture. More than 700 of the world's leading companies have transformed the office of their CFO with HiRadius. Unlock working capital and reduce bad debt with the best AI-powered accounts receivable management software. To learn more, visit us at hijradius.com. Hello, we're speaking with Adam Swiecicki, CFO of Brex. Adam, welcome.
Hey, Jack. Nice to be here. Thanks for having me.
Yeah, good to have you with us. And as always, we're going to begin by asking you to look back for us, Adam, and curious as to what the experiences you feel best prepared you for this role, the CFO role at Brex.
Yeah, of course. So I think the traditional CFO path has been much more on the accounting side, or working at companies and working your way up through the FP&A function. My background is a little bit different, and you're seeing a lot more of this. So I started out on the investing side. So my background is I worked in investment banking at Morgan Stanley in the M&A group, and then subsequently worked at Hellman & Friedman, which is a large cap private equity firm out in San Francisco for 2 years. And then most recently was at Viking Global, which is a large crossover hedge fund based in New York. And so I think all these experiences, they're a little bit different, but did a great job of preparing me for the CFO position at Brex. I think, the investing background does prepare you to really look at things from a strategic lens and be very involved in the business outside of what I'd say is the traditional finance role, just because as an investor or board member, I had a lot of experience working across a lot of different functions in my prior life. And then also, I think at startups in general, and then Brex in particular, fundraising, whether it's with equity investors or debt investors, is the lifeblood of our business. And so having that investor mindset has been very beneficial for me as I've joined Brex. So been at Brex now for 2.5 years. joined as the head of corporate development. And, I was head of corporate development for 6 months, VP of finance for a year, and then a year and a half after I joined, became CFO and have been CFO for the last 8 months.
Now, I'm curious about the corporate development role. Clearly, that is the door of entry that we see many finance leaders take from the investment banking world into the corporate environment. Wondering, back in your banking days, were you involved in M&A? What was the nature of some of what you were up to there?
Yeah, of course. Yeah, so spans the full gamut. So I think in investment banking, my primary experience was in M&A. So I worked on a handful of transactions, mergers across the natural resources space, healthcare, and technology. So had a lot of experience looking at deals, executing on those transactions. And really, I think in the investment banking role, you're working primarily as an agent for other people where they come to you, they're looking to do a deal. And I think it's well advertised that in investment banking, you're incentivized to make sure those deals get done. But I think it's a great training ground for a young person. I think that on the other side, in private equity, you actually are the principal in the transaction, meaning that when you invest, so I made one new transaction while I was there, you are the principal and you're putting your money or putting the money where your mouth is, so to speak. And so I think that at Hellman & Friedman, you not only make that upfront investment decision, but there's a lot of follow-on work with really making sure that you work with the company to help grow that company and increase the value of that company over time. Because as a private equity investor, you are taking a board seat and you are working with that company to ultimately increase its value and sell it to another investor or take it public to achieve a return on that investment.
I just want to clue our listeners in that I think your trajectory into the role was rather accelerated. I see that you got your MBA at Harvard back in 2017. You must be on some 30 under 30 lists. You are a young CFO.
Yeah, so I am actually not on the 30 under 30. I became CFO at 32, so just missed the cut. My wife is 30 under 30, but I am not, unfortunately. But yeah, I would say generally I find that in a lot of forums I'm on the younger side.
Yeah, that's and forgive me for pointing that out. I don't know if that's a form of ageism on my part or not, but you had a quick ascent, and I'm curious the type of company that you imagined yourself joining when you began to think about entering the corporate environment. Did you have some criteria in mind?
Yeah, so I think that for me, the criteria that I really used was first of all, I think a big part of the reason that I was transitioning out of the hedge fund world into the startup world was really looking for something where I could make an impact. So I think the initial attraction to finance is always, hey, this has been the case for 20 years. This is where you can make a lot of money. I think you've seen a big exodus of talent out of finance into the startup world for people, of my generation and younger generations really looking for having a broader purpose with their career. And I didn't really feel like I had that with investing. So in that vein, what I was really looking for when I made the transition, whether it was Brex or another company, was finding a company with a mission that I could identify with. And so, at Brex, for example, I think it's really, the way I think of it is as a force multiplier, because we're serving other startups and really trying to make those other startups successful as our customers. And so that to me was a very inspiring vision of Brex is this platform which is enabling these other businesses, which are changing the world in a lot of different ways to grow and create a lot of value. So I think that was the biggest draw for me to the company. And I think the second one was really this idea of dream big. So our founders are from Brazil, where the founders of 3G Capital reside. And they had this idea, a book actually called Dream Big. And that mindset really pervades the entire company, where we really think about attaining a really large outcome and having a big impact on the world. And I think that looking at Brex relative to other startups I was evaluating at the time, I think that Brex really stood out as, hey, this could be a $50 or $100 billion company someday and make a really big impact and matter to the world. So I think that both of those things were really strong draws for me to the company.
Well, we do have some other career questions likely for you, but right now let's find out about Brex. What does this company do and what are its offerings today?
Yeah, of course. Yeah. So Brex is primarily known as a corporate card for startups. So that's how we started. And 5 years ago, we were pretty well known for having billboards all over San Francisco. So anyone who lived in the area knew us quite well. But actually what's happened over the last 4 to 5 years is we've become a lot more than that. So started out as a corporate card and actually also started offering a business account. So the idea is we offer companies essentially a bank account and a credit card to give them everything that they need to get going with their business. But what happened over those last 4 to 5 years is a lot of our original customers grew up to become really, really large businesses and in fact, almost enterprises. And we realized that there was a lot of needs that they had that we weren't meeting as just a corporate card. And specifically the area that we've really pushed hard into is expense management. So expense management would be things like card-based spend management, travel, and bill pay solutions. So think about things that you might use Concur for. And so Brex has really pushed pretty hard into enterprise software, building out the software suite with really the core focus being help our companies and our customers move faster and have a much better experience with their card and spend management software. Where today, I think the primary players in the market, Amex and Concur, they have most of the market share within enterprises. I think most people know when they fill out an expense report, it's a really painful experience. They hate it. It's miserable. We think that there's a really big opportunity to really disrupt that space and make it much, much better.
Now, can you give us maybe a brief history of the company's capital structure or history?
Yeah, of course. Yeah, so we've been pretty active on the fundraising side. So like I said, we've been around for 5 years. So we've raised in that period of time a little over $1.5 billion of primary capital and another $500 million of secondary capital. And we did about $1 billion of that over the last year and a half or so on the equity side. And then on the debt side, we have a little bit over $1 billion of committed funding from our bank partners and through our securitization. So very active on the fundraising side, both on the debt and equity side. Our major backers that people would know would be Ribbit, Y Combinator, Lone Pine, Tiger Global, and a handful of others. So a pretty broad range of backers and good success with fundraising from investors.
And again, you stepped in really, it's last fall that you stepped into the CFO role officially.
Yeah, that's right.
So when you step into the role, what are your priorities over this 12-month period, this last year? What is it that the checklist that you've been going down?
Yeah, I think that for me, there's been a few things. So first of all, I think it's hard to ignore the macro. So this is an unprecedented time in terms of what's going on with the economy, what's going on with interest rates, what's going on within the tech startup space, which we service specifically. So I think for us, we've done a lot of thinking around, we are a financial services and a financial software company. We are serving companies with their most mission critical needs. We need to have a sterling risk management reputation. And so a lot of what I do, I'm a member of the credit committee. I am the CFO. I have to think a lot about making sure that we have a very strong brand and we can become or remain a trusted partner for our customers. So I think that that's been, number one. Number two is we've had a pretty big shift in our business from being a financial services company, focusing more on startups, to this vision that I laid out for you of a financial services and software company serving not only startups, but also mid-market and enterprise companies. And so there's been a lot of work to do around that, involved in launching our software product. I'm actually the customer for our software product. So we sell to CFOs and chief accounting officers at companies. So I actually kind of fun. I got to be very involved in building out the product roadmap and being the first user of our product, our software product called Empower. So I've been very involved from that angle in terms of product development, but also there's a lot of work in terms of pricing that product, adjusting go-to-market incentives, reorganizing how our go-to-market is structured, that I've been very involved with over the last years. We've scaled up that software product and we launched it publicly in April of this year, announcing DoorDash as our premier enterprise client for that software launch. So been very involved there. And then the last thing I'd say would just be, more broadly, just scaling the finance function. So in my time since being VP of finance to now, the company has scaled from 400 employees to 1,300. So we've tripled in size. And there's been a lot that goes into scaling the finance function to support that, both in terms of being a more robust finance function to support a company at scale, but also as we think about at some point when the business is ready, going public. So there's been a lot I've done in terms of building out the team, up-leveling our systems across accounting and FP&A, and also improving the forecasting of our business that I've been working on.
One would imagine that you're pretty sophisticated when it comes to the sales funnel in terms of how an account or a customer might be maturing. What can you tell us about the sophistication with which you're able to read your customers along the funnel?
Yeah, of course. Yeah. So I think we do actually have a pretty interesting company from a data perspective because we have the credit card and bank account information for a large swath of startup customers. So we can see in real time the health of those customers, how they're spending, what they're spending on, what is our wallet share, how are those customers using our product across a large variety of touch points that when you talk about a bank account and credit card basically touch every employee at the company. And I think that from a data perspective, probably the most interesting evolution or most interesting thing that we've done over the last 6 months or so is really look at, I would say, more of a non-traditional finance metric, which is looking at the value we create for customers. And so when we think about a spend management product and helping companies move faster, which are our goals, we've started to look at things like how much time do employees or managers spend in a review for compliance spend? How many receipts can we auto match for our employees so that they can swipe their card and not do anything afterwards? How much time do we pull out of the system by automating reconciliation of our receipts to a general ledger account? And so all these things add up into dollars, into employee headcount saved, into speed for the company. And we think about what is the value we're creating for our customers. And I think that's really important because number one, that's a goal that isn't really a finance metric. It's something that the whole company can rally around. And engineers and product people or operations folks, they can all focus on increasing that value for the customer. And we want to increase that alignment with our customers. And it's also important for us to think about from a finance perspective when we think about pricing, because we're always making sure we want to be creating value for our customers, pricing at a very large discount to that value we're creating, extracting some of that value for ourselves, but ultimately delivering a lot of ROI for companies that are buying our software product.
Everyone's trying to get a read on the economy. And of course, with the inflation, there's been some contraction in venture dollars out there. With quite a few startup customers, how is this impacting this business? What have you seen as far as customer behaviors changing?
Yeah, so I think there's a few things going around. I actually joke, I think that our data set would be very helpful for hedge funds. I've been able to look at our data around spend on Snapchat, around spend on a variety of other companies that haven't yet reported. And I could, kind of call the earnings before they actually reported because we see all that in real time in our data. But it has been interesting to observe. So to answer your question, what we saw coming into this year and we still see is that startups are very, very healthy overall. They have record high cash balances. They raised a lot of money last year. So overall, our customer base is very healthy. And actually the cash runway, which is what we're focusing on in terms of how long do these businesses have before they need to go out and raise capital in a pretty tricky environment, has actually remained pretty stable relative to last year. And the reason that that's happened is, of course, a lot of these businesses are cash burning, but at the same time, they've also adjusted their spend down a little bit over the course of this year to react to the changing macro. So we've seen our customer base maintain a relatively high level of health despite everything that's been happening. And I think that has a few impacts on us. I think, first of all, there is an element of yes, our customers are spending a little bit less on our platform, but I think the baseline for us is very, very high levels of growth every month. And I think it just means we're growing a little bit less. Well, I think, in terms of things that we can control, we're seeing ourselves take more wallet share, take more market share of the spend that is happening. And then I think the second thing that's happening is that I mentioned this idea that we're a spend management platform. And if you think about the macro and how that jives with this idea of spend management, you are seeing a lot of companies that are evaluating spend management solutions. And a lot of the things that we're pitching help people not only spend smarter, but also reduce spend where they need to, and reallocate that spend to higher ROI areas. And I think that message and that pitch is very on trend with what is going on within the startup world and also the macro more broadly. So I think that, to kind of put it succinctly, you've seen kind of customers spending a little bit less, but you've also seen, I think, our share gain really accelerate during this period in both the startup ecosystem and overall as we think about the pitch of our spend management software. So we're doing the best we can in terms of controlling the controllables and have, I think, actually done very, very well with the macro backdrop considered.
I want to quickly touch on talent with you. And again, with this environment being rather unusual, hiring still a big challenge for a lot of companies out there. Is it for you folks? And what do you see out there when it comes to talent and acquiring it?
Yeah, so definitely, I think that last year in particular was probably the tightest labor environment I can recall in my career across finance or tech. We've definitely seen a little bit of that change over the last, call it 6 months or so. And I think that you could go to any headline in TechCrunch or the New York Times or Wall Street Journal and see the layoffs that have been announced in the tech industry. That said, I think that there's still a lot of demand for the highest quality talent. So I think for us, we're still growing our headcount. All it's really meant is we become more selective around who we hire, because I think that you have the opportunity set is much more attractive now. And also you're seeing companies that are top grading talent. So before, in an environment with unlimited headcount growth, I think the quality bar was a little bit lower. Now I think that you're seeing companies trying to do more with less, and whether it's hiring new people who are higher quality or looking at their teams and making sure that they have the right composition for their business, being really thoughtful around how they hire. And so, I think we're laser focused around this. We use a tool called Lattice, which is another startup, which is great in terms of conducting company-wide calibration sessions where we regularly review 360-degree performance. And then also we're constantly tracking engagement of our employees across various tools like Culture Amp, et cetera, to make sure that our employees are engaged and happy. I think one probably meta point or a higher level point is just probably the biggest bandwidth constraint or the biggest constraint we have and continue to have had and continue to have is leadership bandwidth. And there, I think it's really, we've done a lot of work making sure the leaders that we have in the company are the best ones for the company at this point in time. And that's something I think you see startups struggle with all the time, in terms of what a startup looks like 2 years ago or 1 year ago is very different from what it looks like today. And we do a lot of work making sure we have the right leaders and the right talent to lead the company for the stage it's at and the challenges we face at any given moment in time.
We want to ask you what we refer to as a finance strategic moment. And this is just one sort of aha moment that you've experienced during the course of your career. And it may have happened early in your career. It might have happened last month. But would you have a finance strategic moment for us? Anything come to mind?
Yeah, sure. So I think that the thing that comes to mind is, so I mentioned at the start of the podcast that I worked at a private equity firm. And so in my experience at Hellman & Friedman, I was a board observer and the main associate responsible for a company called Kronos, which is a HR software company that was owned by Hellman & Friedman at the time. And at that time, my main project when I joined Hellman was to work with the Kronos management team to evaluate a transition from a traditional on-premise maintenance and licensed software product to a SaaS product. And I think the important context here is this was back in 2013, before anyone really knew what SaaS was and before it was really fashionable to call yourself SaaS. And so I did a lot of work with the management team. This was a 6-month project. And really what the output of the work said was, this is a great long-term investment for the company. Our customers are going to love it. This creates more revenue and earnings for us over the 10 to 20 year view. But in the near term, it actually means our EBITDA or earnings are going to decline as we shift from this existing business model to the new one, because a lot of people who are listening to this are familiar with revenue recognition and monetization on SaaS is generally over a longer period of time than the traditional software model. And so I think sitting here again back in 2013 and pitching, myself included, to our board saying, hey, there's this investment that's grown 10 to 20% per year. Now we want to actually take earnings down next year and the year after, because we think that over the long term, it's the best decision for the company. That was a pretty hard pitch to make to, again, private equity owners who are at that point were sitting on a home run investment with our largest position at the firm. And so I think it was a really cool project, and I think a really, really important learning for me, because we ultimately did pull the trigger. We made the investment. We made that SaaS transition. We took earnings down. And fast forwarding now, 10 years later, Hellman & Friedman actually still owns that company. They've merged it with Ultimate Software Group. It's a $30 billion privately owned business. So it's been a massive winner and the most profitable investment by the fund ever. And for me, I think the real takeaway from this was, in that whole kind of arc that I sketched out, we approached it very strategically. We thought like owners. We were very long-term oriented, and we had conviction in the bet we were making by investing in this new SaaS product. And that, I think that's a simple thing to say. It sounds really good, but it's a really profound, I think, learning, especially as I reflect back on the market of the last 2 to 3 years, where I see a market that had negative real interest rates, had free money, had investors saying grow at all costs, were pushing their companies to hire more and more. And now, 6 months after that, market is down, views on profitability have changed, and those same investors are going back and saying, hey, I told you last year, hire all these people. Now we want you to be profitable tomorrow. And I think the point is you can't really run your business that way. You have to kind of have your own internal view of this is the right thing for the company. We have our own internal scoreboard, and we know that over time, if we increase our revenue, our profits, and our value for all of our stakeholders, the market and the value of our company will reflect that. And so to me, that was a really important learning. And I recognize we're a private company. It's much easier to say this as a private company versus a public company, but I will try to retain that lesson as much as I can throughout the rest of my CFO career.
Hi, it's Jack, and we hope you're enjoying our talk with Adam Swiecicki, CFO of Brex. We wanted to quickly mention, if you haven't visited CFOthoughtleader.com recently, you may want to check us out. We have begun to post videos of many of the finance leaders we've been speaking with. You'll find our CFO Thought Leader videos featured on our blog. Just look for it on the nav bar. But that's not all. We now have a library of ebooks spanning many different topics, featuring none other than our CFO thought leaders. The ebook library is featured in our resource center, also found on our nav bar. We'll now return to our interview with Adam Swiecicki. Then we like to jump to what we refer to as our mentoring round, where we ask you several quick questions, beginning with this one. We'd like you to think back. It was only a year ago, but when you first stepped into the role, that first 30 days, that first 60 days, if you could go back in time and tell yourself something, what would it be?
Yeah. So again, kind of hearkening back to my investor mindset, I think the biggest thing that I've had to change in it over the last, call it 6 to 9 months, has been I came into this idea of our role as management is to maximize shareholder value. And I've really transitioned to this idea of instead, we have to think about maximizing stakeholder value. So this idea of stakeholder capitalism that Mark Benioff and a handful of other CEOs are large proponents of. And, I'd heard about it. I hadn't really given it much thought until I stepped into the role. And what I've realized in my position as leader of this company, and I think interacting with not only our investors and our board, but also I work very closely with a handful of our top customers as we've implemented our software product with them. I interact with our debt investors and our bank partners on a monthly basis. We interact with regulators who oversee our business and make sure that we're stable and we're able to support our customers in a responsible way. I've realized, and of course, the employees who do all the work, create all this value for our customers, and where, as you mentioned, there's a real talent war out there going on, and we need to make sure that we do right by our employees, we hire the right people, and we retain the best ones. I just realized that there's this really broad ecosystem of people that Brex touches, and it's really important that we keep all those people in mind with every decision that we make. And I think historically, there's always been this view that shareholders and stakeholders aren't necessarily aligned, but I think what I've realized is over the long term, they're very aligned in terms of maximizing value for all of them together. And I think that now it's more important than ever, because I think you've seen with younger generations, there's this, and even customers, I would say, there's this movement that wasn't really the case 5 or 10 years ago, where there's a lot of people who are very focused on what is the mission of the company that I work for or the vendor that I use? What do they stand for? What are their public stances on issues that I care about? And these things are much more important today and do impact the value of companies. I think you've seen a very prominent example of that is obviously Facebook. And so I think this idea of stakeholder capitalism and really just having a very expansive view of how we create value, and myself as a CFO has a lot of influence on that, is something that has been a big learning for me since I've taken over the job.
Want to have you reflect a little on the personal side. We want to find out something about you, Adam, here that we usually ask if you have a personal habit or part of a daily routine that sets you apart from all the others. But what is it that this might be something a family member, in fact, would tell us about you, something that you're known for? What is it? What might that be? A habit, routine, something you do?
Yeah, of course. So probably not super unique, but I do read a lot. So I think that that's a pretty big defining characteristic for me. So I actually went and looked at this somewhat recently at how many books I'd read in the last year. So I read 30 books, which, I think if you're busy with your job and have other things that you do, I exercise every day, things like that. It's quite a bit of reading. And I think most of these books are.
Where do you find the time? I mean, where are you? You always have a book with you? I mean, is it? Are you able to do that? Some people are, they need the right setting to sit down and read a book. What is your secret?
Yeah. So, like a lot of things, I think I do it in a very aggressive fashion. So, what will happen is I'll be very busy with work. I won't read a book for 2 weeks at a time, and then let's say it's August, it's 3 weeks from now, I take a week vacation. I'll probably read a book a day during that vacation. So I'll read 5 to 7 books during that week. And generally when I read, it's pretty focused reading. So I'll go through, it's on my Kindle. I'll go through and highlight the book. And what I generally do is, and the reason I do that is I'll go back and periodically reread those books or re-review my highlights, because what I found with a lot of these books, whether they're biographies or books about emerging business trends or books about the macro environment, depending on where you are in your life or what experiences you've had, when I've reread these books that I've read for the first time 2 or 3 years ago, they mean something a lot different to me now that I've actually had different life experiences and I've actually seen some of the opportunities to apply these lessons in real life. And so I have found that style of reading and applying it in my day-to-day work has been incredibly helpful for me to be more effective.
Oh, great example for us. That takes us to a book recommendation, which might be unfair under the circumstances, but of the last year, maybe we'll try to narrow the window down of the last 30 days. Now, what would you tell us? Is there a book, something you'd recommend, something that really did make an impression on you over time?
Yeah, for sure. So I think for this type of question for podcast listeners, I definitely want to recommend something that's practical and accessible. And so, as I think about those criteria, probably the best book that I can remember in the last year was called Working Backwards. It's a book about Amazon. It's by two people called Colin Breyer and Bill Carr. It's the definitive book around how Amazon is run. And, there's been a handful of Amazon books before, more about the story. So the Everything Store and Amazon Unbound. This book really dives into how is Amazon run on a day-to-day basis and how do we adopt some of those best practices to make our business run better. And so it introduces these concepts that maybe some of the listeners have heard about around a memo-driven culture, single-threaded ownership, input metrics, PR FAQs for all of the new products that you launch, and kind of thinking about the end state and then working backwards to the current moment in time. And for me, I think that this book was really helpful in terms of giving me very practical tools, which we've implemented all of the things that I just mentioned actually at Brex. And I've really seen the power of applying these things in action. And so I think that this book was probably one of the most practical and useful books that I've read in recent memory.
And we are up to our final question, where we're going to ask you to look forward for us. And within the next 12 months, what are your priorities as CFO of Brex?
Yeah, so I think that, we talked about this a little bit already, but I think it's a continuation of the themes. I think, first of all, in the current macro environment, maintaining our risk management reputation and ensuring that we really do right by our customers, our bank partners, and our investors to really protect Brex, but also do so in a way that is customer friendly over the next 12 to 24 months as we think about ourselves as a financial services and software company operating in a very uncertain macro. And we want to really make sure that we are that trusted partner that is there for our customers and able to support them through this difficult time. So I think that that's really number one. I think number two for us is really, we've launched this software product. We have a few customers that we've announced publicly, one of which is DoorDash. We really want to scale that product up further and really become a expense management player at scale. And so for me in finance, there's a lot of work involved in terms of making sure that that product roadmap is correct, and making sure that, again, I am the customer for this product, that we are the best users of this product, and that we are the best advertisement of how to implement this product properly, as well as leading all the work that we've touched on around pricing, sales incentives, overhauling our customer service delivery model to make sure that we make this a best-in-class experience for our customers. And then the last thing is really, I think for finance, we want to, I think for Brex as a whole, we want to be a public company someday. And there's a lot of work that goes into being IPO ready. So we did a readiness assessment last year. We're actually in a pretty good spot relative to most companies. We have a fairly sophisticated finance function. We have 35 people who work for me. But there's more work to do around up-leveling our FP&A system, meeting PCAOB audit standards, improving the quality of our forecasting to the point that we'd be ready to give guidance and feel very confident in it. So, we're not imminently going public. We don't have plans to do so, but we want to make sure that, when the business is ready, that we're there to support it. And regardless, in terms of being a more scale business, these things are important to make sure that we are doing a good job of tracking our business.
Adam Swiecicki, thank you for joining us on CFO Thought Leader.
Great. Yeah. Thank you for having me. Really enjoyed it.
Hello, listeners. Do us a favor. Be certain to subscribe to CFO Thought Leader on Apple Podcasts, or if you're an Android user, check us out on Spotify or Google Play. If you like the show, please recommend it to a friend.